Thank you for taking the time to join us today for this event. On behalf of AMI Organics Limited, we welcome you to the virtual brokers and analysts meet on the announcement of the company's forthcoming IPO. Before we begin, I'd like to introduce the management and distinguished guests who would be addressing today's gathering. From AMI Organics Limited, we have with us Mr. Naresh Patel, the Chairman and Managing Director, and Mr. Abhishek Patel, the Chief Financial Officer. We also have with us some senior investment bankers who are representing the PRLMs. We have Mr. Vikas Khattar, Managing Director and Co-Head of Investment Banking and ECM at Ambit Private Limited. Mr. Ankur Agarwal, Vice President of Investment Banking Coverage at Axis Capital Limited. And Mr. D.K. Surana, Managing Director at Intensive Fiscal Services Private Limited. We've placed all microphones on mute. After the presentation, we will open the floor for questions. The questions can be typed in the Q&A panel available to you, and they will be read out to the management on completion of the presentation. I now invite Mr. Vikas Khattar from Ambit to initiate the proceedings. Over to you, sir.
Thank you. And dear friends, a very good afternoon to all of you. On behalf of AMI Organics, as well as all the book runners team, I actually take great pleasure in welcoming each of you to the virtual broker conference for the marquee IPO of AMI Organics Limited. Today, we have the privilege of having with us Mr. Naresh Patel, who is the Chairman and Managing Director of the company, as well as Mr. Abhishek Patel, the CFO of the company there. We also have my fellow book running lead managers, Mr. D.K. Surana, Managing Director from Intensive, and Ankur from Axis Capital. While we all would get to hear from Naresh Bhai about the inspiring journey of AMI Organics, which he, along with his counterpart and his partner, Mr. Chetan Bagasia, as well as the professional management team, they build up a interesting and impressive company. But just as a quick introduction, AMI Organics is a R&D driven manufacturer of a specialty chemical with varied end uses towards the development and the manufacturing of advanced pharmaceutical intermediates, as well as the key starting material for agrochemicals and fine chemicals. AMI Organics has developed and commercialized over 450 pharma intermediates for APIs across 17 key therapeutic areas since inception. Now, I can keep on going and telling you about what all they have done, but then I would be taking time from Naresh Bhai on that part, and I would request Naresh Bhai later on to talk more in details. But suffice to say that the company supplies its products to more than 150 customers, including many of the international customers directly in India, as well as in 25 countries overseas. Our principal manufacturing facilities is based in Surat, and company has recently acquired the business of Gujarat Organics Limited, along with the manufacturing facilities at Ankleshwar and Jagadia. Now, let me quickly take you through the key details of the IPO. Can you just please put the slide? So as we can see that we are coming out with an offer which is comprising of both fresh issue as well as the OFS. The fresh issue is 200 crores and the OFS is up to around 6.05 million shares. Here it will be interesting for us to point it out that when we filed the DRHP, we had come out with a fresh issue of up to 300 crores with an option to do a pre-IPO of up to 100 crores. And I'm pleased to inform all of you that company has got a very, very overwhelming interest from the investors. And we have actually done the pre-IPO placement of 100 crore rupees to a very marquee three investors at a price of 603 rupees per share. As far as the use of proceeds are concerned, we are going to repay almost around 140 crores as a repayment of a certain facilities and the debts on the company. 90 crore rupees would be used as a working capital requirement, and the remaining would be for the general corporate purposes. As all of you know that entire pre-issue share capital would be locked in for 1 year, and promoters would be 20% of the holding would be locked in for 3 years. While some of you would have read in the newspapers that SEBI has reduced these lockup periods, but that will be from a prospective effect. So for us, these restrictions would be applicable as it is mentioned on the screen there. Needless to say that from our perspective, it's a QIB is a 50% as we are a profitable company, and non-institutional portion, which is the HNI segment, is 15% of the issue, while the retail is 35%. Based on the extensive marketing work which has been done by us along with the management team, where management team has actually met over 85 investors in the run up to this part, as well as the demand which we received the time of a pre-IPO, we have decided to price it in the range of 603 to 610 rupees there. At a 603 rupees, we have done the pre-IPO, as I have already mentioned. The bid lot would be 24 equity shares and it multiples thereof there. It's going to get listed on both the exchanges. As far as the issue timing is concerned, the anchor part is going to be done on 31st of August. And we have actually got humongous interest from the very marquee institutional investors for the anchor part also, which will be, you will come to know on the 31st about the final allocation to them. And issue is opening on 1st of September and will be closing on 3rd of September. Both Ambit, Intensive and Axis as a buyer to the IPOs are extremely delighted to bring on this unique company to the public market for listing, as we actually strongly believe that it will be an excellent opportunity for investor community to participate in this unique growth story in the years to come. We would now begin a session with a short video about the company and then followed by a presentation to Mr. Naresh Patel. I'll request the video to be played. Moderator, can we play the video? Yeah.
Specialty chemicals with varied end use. AMI Organics Limited, an R&D driven manufacturer of specialty chemicals with varied end usage. With a focus towards the development and manufacture of advanced pharmaceutical intermediates for regulated and generic active pharmaceutical ingredients, as well as new chemical entities and key starting materials for agrochemicals and fine chemicals. Our pharma intermediates find application in high-growth therapeutic areas, including antiretrovirals, anti-inflammatories, antipsychotics, anti-cancer, anti-Parkinson's, antidepressants and anticoagulants. AMI Organics has 3 manufacturing units with a total installed capacity of 6,060 metric tons per annum, located at GIDC Sachin, GIDC Ankleshwar and GIDC Jhagadia, all in Gujarat. The Ankleshwar and Jhagadia facilities have been recently acquired from Gujarat Organics Limited. The products manufactured in these plants find end usage in cosmetics, animal feeds, dyes and agrochemicals, helping us to foray further into the specialty chemical sector, significantly diversifying our portfolio and expanding our business. The dedicated in-house R&D facility located in GIDC Sachin is supported by our analytical development laboratory in relation to developmental activities. Our focus on R&D and continuous process improvement has positioned us as a preferred supplier for our customers. In fact, AMI Organics has 8 process patent applications which have been published and 3 additional applications that are pending. We have also made an investment in our joint venture, AMI Oncotheranostics LLC AOL, a Delaware, USA entity, which, by way of a transfer of patent usage rights, is entitled to worldwide usage with the exception of one country of certain patents used in the development of new photosensitizing compounds. AMI Organics has developed and commercialized over 450 pharma intermediates for APIs across 17 key therapeutic areas since inception, as well as new chemical entities. With a customer base of over 150 customers in India and 25 countries overseas. Our strategy of early identification of molecules for development and supply has made us a major player in some key pharma intermediates. A strong market research-based model with an ability to diversify into new markets. Long-standing relationships with key customers in an industry marked by high entry barriers and with the capabilities to manufacture specialty chemicals on a make-to-order basis. We are AMI Organics Limited.
Thank you. I'm sure that video has helped to throw some light on the business of AMI Organics and its operations. I would now like to call upon the Chairman and Managing Director of AMI Organics Limited, Naresh Patel, to take us through the presentation. Over to you, sir.
Thank you very much. Thank you very much, all the participants, to allowing AMI Organics to represent in front of you for our upcoming IPO. My dear friends, myself, I'm a chemical engineer, studied from DDIT Nadiad in 1996. After that, I joined Larsen & Toubro as a project engineer, and I was a part of a team who has built up and commissioned Asia's largest milk powder plant. This tenure gave me a very good experience of how to build up and commission big facilities. After that, I decided to go my own and I joined my hand with my childhood friend, Mr. Chetan Mogasia. He himself is a textile engineer. So we both has a vision to grow, and we joined hand and put up a small lab in Surat under the name of CNR Intermediate, through which this lab we supply key starting raw material for big pharmas for the clinical trial phase 1, phase 2 kind of molecule to business houses based in Mumbai and Gujarat. So out of these few molecules move from phase 1, phase 2 to phase 3, and the large quantity demand arise in 2003-4. And we started AMI Organics in 2004 for catering the larger quantity of this kind of intermediates to the big pharmas. So this is how our journey started in 2004 as AMI Organics. Since 17 years of time, we learned that we cannot only depend on a phase 3 kind of molecule for our growth. So we divided our business model in 4 ways. Out of that model, 1 is continuously focusing on the supplies of KSM requirement for big pharmas for the early stage development. Whereas in model 2, we created in-house business development department, which is consisting of research and development, marketing, sourcing, and operation team. And this team has started focusing on the intermediate for the API, which are in the later stage of launching, or it is in phase 4 kind of things. And they identify 17 therapeutic areas, which are the area which is one of the fastest growing therapeutic area in pharma industry. So they started looking on these intermediate, they study the journals and they study the clinical trial data and all that. And based on that, they identify the intermediate which we have to develop. They develop very early before it is launching, so that when the API launch, at that time, we are ready with our intermediate with all the documentation which is mandatory for pharma industries to make the drug master file for API manufacturer. And then we circulate this kind of intermediate to all our customer base based in Asia or in Europe or in Asia like Israel, China, Japan, Korea, Taiwan, in India, as well as in Europe, all the South Europe countries as well as North Europe countries. And then these generic manufacturer use our intermediate to file their DMF. Either it is for first to file or going for the polymorph challenging, or they wait for the generic application. In this segment, in module 2, we have developed more than 400 molecules, and this molecule is having a patent expiry up to 2032. These also give us an sustainability and long-term visibility of our product pipeline. And for upcoming years, we have always, there is a molecule available for our growth. Apart from that, in model 3, there is a model where big pharmas in the world are nowadays freeing their capacity for upcoming new molecules. So they are giving these molecules for the toll manufacturing, and AMI Organic is getting this kind of businesses from these big pharma. And that is also exclusively basis we are supplying to them. Whereas model 4 is a model which we started in 17-18, where we started focusing on some molecules which are completely dependent on China. And that is a big potential to grow because of there is dominancy of China is there. So we identify several molecules in that. We develop this molecule in research and development lab of AMI Organics. And now we are in phase of scaling up this molecule. So in upcoming years, this molecule will be going to the launching and commercialization from AMI Organics against China. So this is our business model is working. But in this last 17 years of time, we also learned that our chemistry, which is very unique, and we are very strong in that chemistry, having some applications and some molecules of our having application in specialty as well. So we started promoting our product in specialty chemical segment as well. And currently 5% of revenue is coming from these specialty chemicals, which is an organically we are growing in that. But we decided to go also inorganically, and we started finding out any possibility available, and we find out Gujarat Organic is the best option for us. There are 3 major reasons for which we acquired Gujarat Organics. Gujarat Organics has a very good product pipeline, and this product pipeline has a very diversified applications, not only in cosmetic and personal care, also it is in agrochemicals and petroleum industries. They have developed one electron donor catalyst, which is very useful for making polypropylene, and they are also holding the patent on that. So these are the key areas where Gujarat Organics has a very good potential of growing the segment. Apart from that, in 2019, Gujarat Organic has built up a new manufacturing site in Jagadia, which is having a huge capacity free available, which can be immediately utilized by AMI Organics for their backup of their own product, or new product can be produced from there. Also, we can grow Gujarat Organics product portfolio also in that segment. Apart from that, you know very well, everybody knows in India that put up a new manufacturing site, it takes 2 to 3 years to get only surgery approval like environment clearance and etc. And that can be easily avoided as Gujarat Organics Jagadia plant has already 16,000 square meter free land available, which can be utilized by AMI Organics to immediately put up if there is a necessity arise for any expansion in the future. So this is how this is all these three reasons we acquired Gujarat Organics on March 31st, 2021. Next slide, please. There are several milestones we had achieved in last 17 years, but there are two key milestones which I want to highlight here is that as I briefed you that we are making chemicals, and for chemicals, there is no statutory requirement of any compliances in terms of FDA, Food and Drug Administration kind of law, and there is no necessary for any inspection for that. But as we are making key starting raw material for big pharmas, in 2016, US FDA decided to inspect AMI Organics for compliances of FDA regulations. And we went, that inspection went very well, and we got the year for that as well. Apart from that, in 2020, once again, another manufacturer, another API manufacturer for another raw material, US FDA decided to re-inspect, on a second inspection has to be get in AMI Organics, and that also went very well. And we got the year on the same year for that as well. So this is, we want to prove, so that though we are making a chemical and we are not making any APIs, though our quality management system is so robust and so high standard that we are complying as per FDA requirements. So this is one of the biggest achievement, and this is also making us very different than the all other pharmaceutical integrated manufacturer in India, not only in India, but rest of the world. As I already briefed you that our major business is coming from pharmaceutical, but in pharmaceutical, there are so many products and therapeutic areas are there. But our team has identified 17 therapeutic areas, which are one of the fastest growing because there is a daily doses form kind of requirement for the patient population. And then the patient population also increasing in this therapeutic area. And these therapeutic areas like antiretroviral, antipsychotic, antidepressant, anti-cancer, anticoagulant, anti-inflammatory, anti-Parkinson kind of therapeutic area. With this therapeutic area, we are catering more than 150 customers worldwide, including India and 25 countries globally. Next slide, please. After acquiring Gujarat Organics, our infrastructure is have now 3 manufacturing sites. Out of that, the primary manufacturing site based in Surat, which is having a land area of around 8,250 square meters with installed capacity of more than 2,400 metric ton per annum. The important aspect of the Sachin facility is that it has a 13 dedicated GMP line. So that will give us a leverage of producing at a time 13 products, which is giving us a very good asset turnover and compared to the industrial standard as well as the competitors. And this Sachin facility is ISO 9000, 14,000, 18,000, SA 8000 GMP USFDA inspected facility. Whereas Ankleshwar facility is in land area of 10,000 square meters with installed capacity of 1,200 metric ton. And Jagadia facility is one of the biggest facility out of these 3 facilities with more than 56,000 square meter land area and spare land available around 16,000 square meter for immediate expansion. The Jagadia and Ankleshwar facility both are ISO 9000, 14,000, kosher and halal certified, also local GMP certified facility. Next slide, please. Anybody knows that there is a high risk in chemical or pharma or any fine chemical. These are the 3 risks which is very important for anyone. Out of that, health and safety, environment, and social accountability. Since inception in 2004, AMI Organics is highly focused on our responsibility towards this, and AMI Organics is proudly announced that in last 17 years we have a 0 violation in environment. Not only 0 violation, we are highest compliance in environment related regulations. And though we have a leverage of discharging our liquid waste to the common effluent treatment plant, we had decided to go for greener production and greener chemistry. And in 2013, we went ourselves from discharging to the 0 liquid discharge unit. And also we developed such a robust process and all that. Nowadays, we treat our effluent in-house and recycling water back to the utility. This is a very good saving to the nature as well as our responsibility towards the environment we are doing like this. Not only that, our main market is in globally, and for globally, we have to also follow the social and labor related laws as per the global standard. And we know our responsibility, and we got SA 8000 certificate in 2011. So since last 1 decade, we are holding this certificate, which is a very prestigious certificate, and it is prove that AMI Organics is complying the policy as high standard as international standard. And this is, you will not find commonly in any chemical manufacturing facility, these kind of certifications. This is all we achieve with the very good young board and which is headed by myself, and Mr. Chetan Vagasia himself is one of the promoter and a whole-time director, and he is looking after the sourcing and admin kind of activity. Whereas Mr. Virendra Misra is our first employee, and now he's our whole-time director and a director of operations, and he takes care of the operation of the company. There are 3 independent directors also, which are from the different segments. They are holding coming from the different segments. Out of that, Mr. Hital Gandhi himself having more than 34 years of experience in financial industries, whereas Mr. Giri Krishna Maniyar, he himself is having cost accountant and having very long experience in cost accountancy, and he is since 2018 is on our board. His inputs in defining the SOPs and policies for our COX and operation related giving us a very good fruit, and you can see also in our financial as well. Richa Goyal herself is a lawyer and company secretary, and she is also giving active inputs in our statutory compliances. We have more than 500 employees in AMI Organics, and each employee is very important for our growth plan. Out of that, few are listed over here in that Mr. Abhishek Patel himself is a CFO of the company and having education in MBA, but having long experience in accountancy and finance. And his inputs and changing in the policies and compliances make very good benefit of AMI Organics. Dr. Ajit Kumar Chobe having more than 25 years experience working in IPCA and Electrica as an head operation, and after that he joined in 2009 AMI Organics. He is also head of business development department, and he is under his flagship we have developed more than 300 molecules, not only develop, also commercialize and circulate to the our customers. Gaurav Kumar Bandari himself is a senior manager of the company and having a very good relations with all the buyers and one-to-one relations, and he is also part of the business development committee, and he is bringing a lot of opportunity to AMI Organics for our growth. There are two persons in here in operations. Out of that, Mr. Mithilesh Kumar is a vice president operation, whereas Mr. Ramon Lokonde is a president operation. He has a long experience working in a big pharmas like Dr. Reddy's, Zydus, Glenmark kind of companies, and now he's a head operation, a vice president operation of AMI Organics. Next slide, please. Thank you. In strategies, we have a very one strategy of AMI Organic is the strong and diversified product portfolio. This is we define in such a way that we don't want to depend on any single customer or any single product, which is because any single product or customer has any issues will be directly impacting on our growth plan. And since we always try to make diversified product portfolio with diversified customers. In that continuation, can you go to the second slide? Next slide, please. These are the product list which is proving that we have a very diversified product portfolio. These are the products which is contributing around 40-45% of our total revenue. And based on the FNS report, we are holding 80-90% of the world market in these all segments. This proves that we are not only cost effective or very good in technology, QMS, but this is also saying that we are not only supplying to originator all these products, also to the generic player as well, because our IP belongs to AMI Organics, and this is one of the advantage that we can have bigger cake of each and every APIs in these segments. Next slide, please. These all we achieve because of our very good R&D capabilities, and as right from inception, we are R&D driven company. We invest continuously in our R&D infrastructure, and we have a dedicated R&D facility in Sachin, with more than 2,200 square meter facility, which is DSIR facility, having in-house analytical development lab. This lab is having a very sophisticated instrument like LCMS, GCMS, UPLC kind of instrument. Apart from that, our R&D is a digital R&D. We are working on a Kimia software. So this proves that our technology is very secure in terms of any development, and this is run by more than 60 scientists. Out of that, 6 are PhDs and 41 are Master of Science. We also protect our processes in the with the patent, and that we applied around 11 patents, and out of that 8 is already published. So these are also allowing us to avoid any competition of the locally or as internationally. Next slide, please. The diversified product portfolio with diversified customer, and our presence is in 4 continents. Out of that, We have more than 150 customers. In that, 13 customers more than 10 years relations, whereas 50 customers we have more than 5 years of relationship. Each customer has not minimum less than 5 products with, so that is give us a basket with each customer. Internationally, we are few name of already listed over like Organic, Fermion, Cori in Japan, FIS in Italy, Midas in Germany, Medicam in Spain. Apart from that, in locally also like Loras Labs, Zydus, Cipla kind of companies who are our partner in India. Next slide, please. I explained about my strategies of Ami Organics. In that, I already explained you about our diversified product portfolio, inorganic growth by acquiring the facility, possibility of expansion. But one important aspect which I want to highlight here is that any company or any product has always there is a competition arise for product, and the product life is reduce if there is a competition arise in margin also reduce. But in Ami Organics, we have a dedicated department, cost monitoring department, which is headed by Mr. Bhavesh Kotadia. Under him, there is a team who is continuously every month they are doing the MIS for each product life and product position of Ami Organic in the market. And they find any threat of raw material or any kind of price pressure is coming, they immediately trigger the remedy for that, like technology development, yield improvement, operational improvement. In fact, they go up to the extent that if the raw material is not competitive, then they develop the raw material in-house and then give it to the toll manufacturer. By this way, we are controlling our hold on raw material as well, and we are always maintaining our margin at a higher level, at a desired level, what Ami Organics wants. And this is also one of the reasons that in last 1 decade, our import is now reduced only to 27%. This is one of the biggest achievement I can say because of this department and strategy of the Ami Organics. Next slide, please. So I explained till here about our strength, our infrastructure and business model and customer related. From here onward, Abhishek will take over for cost given for this Gujarat Organics and rest of the financial related slides. Thank you very much for listening me. I'm handing over to Abhishek. Thank you.
Thank you, Taresh bhai. So as we discussed in the beginning of the presentation that we acquired 2 business units of Gujarat Organics. One is located at Ankleshwar and second one is located at Jagadia. This transaction was done on a slump sale basis. Total cost of acquisition is 93 crore, out of which 23 crore is paid for Ankleshwar unit and 70 crore is paid for Jagadia unit. On the funding side, we raised a debt of 60 crore to fund this acquisition, and balance 28 crore is raised through internal accrual of the company. And the transaction was concluded as on 31st March 2021. And this acquisition gives us a very good leverage in terms of expand our presence in specialty chemical business, which was earlier only 5% of the total revenue. Now it will expand in a big way after this acquisition. Next slide. So as I was mentioning that the acquisition of Gujarat Organics was done on a slump sale basis as on 31st March 21. So all the figures on our financial, especially on P&L side, you see in for FY21, those are based on the organic growth of Ami Organics Limited, and that is not on a consolidation of any revenue from Gujarat Organics. So if as you see that our revenue is growing at a CAGR of 20% and reached to 340 crore in FY21. Both the pharmaceutical intermediate and the specialty chemical segments are growing at a similar pace. Specialty chemical segment being a small in size, it is going at a much faster pace. Our pharma intermediate business consists of around 85 to 90% of the total revenue in last financial year, and specialty chemical business consists of around 5% of the total revenue. Our revenue is very much supported by our export, which is around 50 to 55% of the total revenue for last financial year, and that is also growing at a good pace of around 22% CAGR. Furthermore, our customer base is also very well diversified, and the top 10 customer consist of around 60% of the revenue, and all those customers has not less than 5 products for each of the customers. So this shows how we diversified we are. Next slide. In terms of margin, as we discussed that we have a separate team for MIS and costing who looks after all the products on a monthly basis, and that exercise has given us a very good results in not in last 3 financial year, but almost last in 5-6 financial year, wherein every year we saw margin improvement, particularly at the material cost level, wherein we saw a very huge jump in the material margin at of around 10%, and that is giving us a very good conversion at the EBITDA and the PAT level as well. So EBITDA improved, has increased by 38% CAGR in last 3 financial year, and PAT has grown at a CAGR of 58% in last 3 financial year. Similarly, net cash flow from operation also growing at a similar pace. But if you, I would like to particularly highlight FY21, wherein it looks like some kind of flat cash flow from operation, but it includes the impact of acquisition. As I mentioned, acquisition was done on the last day of financial year. So in that day, debtors, inventory, and other working capital item becomes part of our balance sheet. So if I remove that one-time event of acquisition impact, the cash flow from operation improves by 15.5 crore. So total CFO for FY21 becomes a 42.5%. Then that is very much in line with other growth parameters also. On the debt side, we have been very conservative company in terms of taking debt, and we had a debt of only 55.6 crore till FY20, including both term and working capital debt, which rose to 134 crore post the acquisition debt we raised in FY21. On the gross block side, that gross block increased to 176 crore in FY21, out of which 82 crore is from acquired assets of Gujarat Organics, and 94 crore is the gross block of existing unit located at Sachin GIDC Surat. On a return profile side, we have a very robust return profile. Our ROE has been 28.3% in FY19 and increased to 32.4% in FY21. Our ROC was also 25.3% in FY21, considering the fact that we rose a huge amount of debt for acquisition, for which we have not received any EBITDA contribution in FY21. Still, that stood at 25.3% for FY21. So this is from our presentation side for financials. Now, if you have any question related to business or financial number, you can feel free to ask those questions. Thank you.
Thank you, gentlemen. We will now open the floor for the Q&A session. We have already received some questions. So while we take those up first, I request everyone to post their respective questions in the Q&A panel. We'll try to ensure that all questions are answered. The first question: what is the contribution of sales from the acquired assets of Gujarat Organics? Does it factor in the FY21 numbers?
As I mentioned, that acquisition was done on a slump sale basis as on 31st March 2021. So no revenue is been consolidated for FY21 revenue, which is 341 crore. There is all organic business only. So revenue consolidation starts from 1st April 2021 only from Gujarat Organics business.
Thank you, sir. Next question. Was the Gujarat Organics acquisition done through internal accrual, or was there any debt raised to acquire this company?
93 crore is the total cost of acquisition, out of which 65 crore is funded through the debt, fresh debt, and 28 crore out of internal accrual of the company.
Thank you. Next question. What is the sort of investment year to date that you've made in AMI Oncotheranostics, and how much investment do you expect to make in this company in the near future?
On the investment side, we have made total investment of 30 crore till FY21, which is started in from 2015. And now, as per commitment, as per agreement, for to get those patent rights of those 3 products, we have made all the required investment in that unit. So we are not expecting any additional material investment to be happen in that particular business for at least for next 2 years.
Thank you. Next question. How have the EBITDA and the profit margins jumped substantially in FY21? Could you please elaborate?
So let me give you some background also on margin improvement. So you witness a very huge amount of EBITDA improvement in FY21. But if you see minutely to our financial for last 5-6 financial year, you will realize that our margins are expanding not only in FY21, but almost in last 5 financial year at a material cost and a processing level. And that is because of process improvement, yield improvement, backward integration, and the new product that we are introducing every year. So now, particularly going to the FY21 margin at EBITDA level of around, which improved by around 6.5%. To break that improvement, we had improvement of 3.5% at material and processing level, and that is because we had a certain improvement in terms of yield improvement for our top product, and the backward integration we did for one of our top product, which earlier we used to buy raw material from China. So this has given us a good improvement in terms of material margin. Plus some of the product newly launched product which are now contributing good amount of revenue, more than 10% of the total revenue, and those are the new products which are contributing, which are getting higher realization as compared to the older products. And combination of these two strategy has given us improvement of 3.5% margin improvement. Plus, since we have a larger sales base, revenue expanded by 100 crore, and that gives us additional improvement at the employee cost level, fixed cost, and semi-variable cost level. And that is given as additional 3% margin improvement in FY21.
Thank you, sir. Next question. The capacity utilization was around 63% in FY21. Isn't this a little low? And if it comes to near capacity, what is the sort of revenue that we can expect from the current facilities?
So in terms of capacity utilization, I would like to bring to your notice that we had a new building manufacturing block constructed during 2000 FY19, and that is 3 times bigger block as compared to the older block. So slowly that block is getting filled with the new products and existing products volume increase. So that capacity utilization is going to expand in next 2-3 years. And let me bring to your notice that Gujarat Organics facility was not there till FY21, but in FY22 we have Gujarat Organics Phase 2 facility at Ankleshwar and Jagadia is also available, and that is utilized below 40%. So with those 3 combined facility available, which are having very much less utilized as on date, so we can expect revenue contribution of revenue growth of 25% CAGR for next 2 financial year will be sufficed from these facilities only, existing capacity only.
Thank you, sir. Next question. Why is the debtor level so high in FY21? Are these amounts fully recoverable? And what is the plan to reduce debtor level going forward?
So in FY21, I was mentioning that we acquired a business of Gujarat Organics, which has not generated any revenue for us in FY21. So that debtors of 118 crore includes the 14.5 crore debtor acquired from Gujarat Organics. So if we remove that debtor, it becomes 103 crore debtor. And the Q4 FY21 sale was 93 crore on a net basis. On a gross basis, it was more than 100 crore revenue for us in Q4 FY21. So it is only 90 days and the data only, which is in line with the previous year as well as the industry standards.
Thank you, sir. Next question. What is your most key raw material and from where is it sourced?
And our key, most of our key raw material are basic chemicals only, like vanillin and benzene and other very basic chemicals. And none of those supply, and those are generally sourced from domestic supplier only, which constitutes around 73% of the total sourcing, and say 27 is sourced from outside India, which is import, and out of which 18% is from China, and none of that supplier is contributing more than 10% of the total purchase. So these are all very scattered kind of purchase.
Thank you. Next question. Will it be possible to share the profitability of Gujarat Organics as on FY21 on an EBITDA or PAT level?
See, till 31st March 2021, that Gujarat Organics business belonged to the old management, and those financials are still not audited by that management. So those precise figures are still not available to us. But that old financials are there, where you can get the idea of that business, which is around 10 below 10% kind of EBITDA was there.
Thank you. Next question. Who are the top customers of Gujarat Organics? Is Organic or also a customer?
No.
They were a completely different set of customers, including Reliance, Bayer, those kind of customers.
Sure, thank you. Next question. Our overall capacity has decreased in FY 2020. So is it that we have sold any part of the business? Or if yes, then was there any related party transaction?
In FY20, till FY20, we have two manufacturing facilities in Sachin. Out of that, one is an old facility which is established in 2004. So this facility is age out, and we need to have to remove that facility. So we started in 2018. We started building. 2017 we started building a new facility, and that is ready in 2018-19. As we are in pharma, we have to have a change control procedure for as per the QMS system, and that is applied. And because of that, it will take time, and 1 year time we had to transfer all the product from old block to the new block. And into December 2019, we had demolished these old block. That's why the capacity is reducing in FY20.
And just a second leg of the question, that since it was demolished, there is no related party transaction involved in that.
Sure, thank you. Next question. Are we doing any joint product development with customers? And are there any long-term contractual arrangements with customers?
Yes, we are doing both joint development as well as long-term contract.
Sure, sir. Thank you. This is a repeat question, but once again, for the benefit of the audience, what is the revenue of Gujarat Organics in FY21, if you could just tell us?
That was 106 crore as on FY21, as per GST return filed by that old management.
Thank you. Next question. Do you see any changing patterns of demand and supply due to the actions in China? And is AMI Organics a beneficiary of the shift away from China?
See, our segment of therapeutic area is not related to any pandemic or any infectious kind of disease. So there will not be any fluctuation in our demand. There is related to China, whatever the product which we are manufacturing, we are holding 80-90% of the world market, and we have always China competition is there. But because of our robust system and robust positioning of our cost and everything, we are holding the key position in that segment. So in that sense, China impact is not there in our business for that.
Thank you, sir. Next question. Your top 10 customers contribute significantly to your top line, and the trend has been increasing over the years. With addition of the new facilities from Gujarat Organics, how is the base expected to diversify?
Of course, because the Gujarat Organics business, the revenue is 106 crore, but the customer base is very, very diversified and in the all the continents of the world. So that will definitely be expanded. But let me bring to your notice that we have 10 customer contributing around 60% of that revenue, but none of the customer is having a single molecule. All the customer having at least 3 to 5 molecules for them. So it is very well diversified in terms of customer as well as the molecule. And whenever new molecule comes, that product basket also gets shifted with the same customer as well as the new customers.
Thank you. Next question. Could you please give the details of the non-promoter selling shareholders? How have they acquired the shares and why are they selling now?
Oh. So as during the beginning of the presentation, Naresh Bhai mentioned that they set up a Ami Organics Limited in 2000, Ami Organics as a partnership firm in 2004. And they joined with Mr. Chovatia, who is the initial investor and promoting our business during that time. So this is how 50% was invested initially by one of the investor, and they are the one who are selling the large portion of their equity during this OFS through IPO.
Thank you. Next question. This is again a repeat query, but could you please elaborate on how much of the debtors in FY21 out of the 120 or 118 crores are from Gujarat Organics?
Yes, so that is 14.5 crore.
Sure, thank you. Next question. The fixed asset turnover for FY21 is around 2.1x. Factoring in GOL's assets, how do you expect the asset turn ratio to evolve, and what are our strategies for improving the ratio?
See, in FY21 also, if we remove 82 crore gross block, which is from Gujarat Organics asset, which has not contributed any revenue in FY21. So again, our asset turn ratio becomes around 3.6 times of the gross block. And going forward as well, we expect similar kind of asset turn ratio, which is that has been our experience with this chemical business.
Thank you. Next question. Do you have any import dependence from China or any other country?
Yes, we are importing 18% from China and 9% from Europe and Israel. And that is still, it means that around 28% of our total raw material is dependent on this country. But we had already developed this intermediate technology in-house. But because of the cost effectiveness right now, we are not making in-house, and we are still continuing to buy from this China.
Sure, sir. Thank you. Next question. With a large proportion of your business coming from pharma intermediates right now, do you see the contribution of specialty chemicals increasing in the future years? And how do you see it increasing?
See, at present, we have 5% of total revenue coming in from specialty chemical, and we wanted to expand this business as fast as possible, and that was the reason we acquired Gujarat Organics business, which is into specialty chemical. And as I told you that it was 106 crore business for FY21. So we can expect around 20 to 25% of the total revenue will come from the business after consolidating that business.
Thank you, sir. Next question. By segment, could you give us a breakdown of the EBITDA margins by the different operating segments that you have?
Operating segments, if you say in terms of domestic and export, so we are generally the EBITDA is generally similar for both the export as well as the domestic business. It generally depends on the product to product, but largely it remains same. Some year it becomes profitable either way also, but it generally depends on the product to product only.
Thank you. Next question. The EBITDA margins of the acquired entity is lower than our own business. Is there any particular reason for this? And also, what is the expectation of profitability for GOL in the near future?
See, when we were in the process of acquiring that Gujarat Organics business, we realized that that business is good, having a good product line and very good margin at material level also. But those operations were not efficient. First, the reason is the capacity utilization was very low, and some of the costs related to operations, like it was around 20%, employee cost was more than 12%. So those are the costs we actually targeted to improve upon, and it is the reason we acquired that business. And we implemented some of those strategy in FY21, FY22. So going forward, we can expect a similar kind of margin in Gujarat Organics after putting into those operational measures in place. There will be some delta between pharma intermediate business and Gujarat Organics specialty business in terms of EBITDA, but a delta of around 3-4% only, not more than that.
Thank you. What was the revenue from the top 10 clients? Rather, the revenue from the top 10 clients was 61%. Could you share what products were contributing to this?
In terms for specific customer you are talking about?
See, there are 30 products which is contributing top 10 clients.
Sure. Thank you, sir. Next question. What is the hedging policy of the company to safeguard from price fluctuations, both on the export of our products as well as the import of our raw materials?
So in terms of import, since we have more than 50% of revenue comes from the export business, and 27% of the total purchase is going to the import. So import is covered against those export in a natural way. And balance of the forex which we have, we generally part of those export proceeds are hedged, and parts is kept open for any benefit in terms of foreign exchange fluctuations.
Thank you, sir. Next question. How do you manage inventory risk, and what is the price pass-on model that you follow?
As I mentioned that we have more than 52% export with a long-term contract with the buyers. These contracts are already covered with the price escalation in the raw material as well as in the currency fluctuation as well. And that is based on the percentage, it can be easily transferred to the customer. But as we have a long-term visibility and long-term orders from these customers, it will be easily managed by ourselves in terms of production planning and sourcing planning. And we also place our orders in a similar kind of long-term orders to our suppliers. By this way, we control our cost of the raw material. Apart from that, for the domestic, there are more than 2 to 3 months of visibility with us, and our domestic buyers are normally spot buyer. So whenever they get put an inquiry based on the current price of the raw material, we put our offer to them, and this is normally we get the order in domestic.
Thank you, sir. The next question, and this is directed to the bankers. The pre-IPO happened at a price that was somewhat lower than the IPO price band. Could you please explain this differential in pricing?
So let me answer that there. I think, as I said, that we have been doing the extensive marketing on this part to come around at a right valuation, where not only the company get appropriately valued, but even the investors also have the opportunity to make it. And if you see that our price band is a very small price band from 603 to 610 rupees, and 603 is the pre-IPO price. And you would appreciate that all the pre-IPO investors are going to take a 1-year lock-in. They would not have any flexibility to exit out before 1 year. And to that extent, based on the advice and as well as the feedback from the other investors, we have tried to price it at a very, very close to the pre-IPO price band there. So it is not any greater difference between them. And only the rationale is that the investors who have committed themselves for a 1 year, they should be trying to give a small discount to them. It's not even a 1% discount to that.
Sure, sir. Thank you. Next question. Who would be the right competitors for you in the listed space?
Now, let me take that. If you look at the RHP, we have captured some of the competitors. Although the business model of AMI is very well differentiated, there is no exact comparable, but we have captured some competitors in the RHP, and they include very diversified names like an Aarti Industries, like a Vinati Organics, like a Valiant Organics, like a Newland Laboratories, and also players like Hiker Limited. So these are some of the peers which we have captured in the RHP, but they are very well diversified players.
Thank you, Ankur. Next question. Your raw materials cost was lowest in last year, and that has led to some margin expansion. Is this low raw materials cost sustainable, and do you see it continuing?
See, as I was mentioning during my presentation, that our team of costing MIs is working on a monthly basis on all the products, and they do continuous monitoring for all the products in terms of possibility of any kind of yield improvement, any kind of supply chain improvement, and the backward integration for some of the products for which we used to import material earlier. So this is the kind of measures which are going continuously for last 5-6 financial year, and those improvements are on a continuous basis going on for us, and will continue in future as well. So this is a kind of continuous exercise, and those are the definitely permanent kind of improvement that can lead to that can be sustainable for us in future as well. Second thing is we have a new product coming in a product basket for every year. 2-3 products comes into our product basket, and slowly they becomes a big revenue generator for us. We have a long product pipeline of more than 400 products which has patent expiry till 2020-35, and those new products are generally better realizing product as compared to the older product, and that also gives us the better margin in terms of at a material level. So these are because of that, those margins are definitely sustainable for us in future as well.
Thank you, sir. Next question. The R&D spend as a percentage of revenue from operations has halved in FY21 and is near the levels that we saw in FY19. Going forward, where can we expect the R&D spends of the company to range in?
See, we expect R&D spend to remain in the range of 2 to 2.5% of the total revenue, and that will continue going forward as well. In FY20, there was a spike which and the expense went up by 4%. Then the reason being that we set new separate R&D center near to our existing facility, and because of that, capex R&D expenditure went up in that particular year.
Sure, thank you. Next question. As the fresh issue is aimed to making debt repayments, what can the investors look for forward for growth levers, and what are the growth plans and margin expectations?
In terms of usage of proceeds, we are making company net debt zero after this IPO. And that can give us a leverage in terms of to grab any future possibility of organic or inorganic growth which we can have in future. So that those kind of growth we can expect in future.
Thank you. Next question. Could you please share the PE comparables of the other listed competitors? And this could be directed to the bankers.
Sure. So if you look at the peer comparison, which we have captured in the RHP also, and it captures the PE multiples for these varied companies, the highest PE multiple is at 67 times of their FY21 earnings, and the average is at 45 times. This is the broad range. Our company at the upper end of the price band is priced at 35 times FY21 earnings.
Thank you, Ankur. Next question. Would it be possible to provide an estimate of what the capex would be for the next 2 years?
On a capex side, we are since we just had a Gujarat Organics acquisition, so we are, and that capacity is a highly underutilized. So that covers our revenue growth expectation in for next financial year. So largely there will be a capex of around for our maintenance of this facility only. And for future revenue growth expansion, capex is still to be finalized for future in 24-25 kind of trajectory.
Sure, sir. Thank you. Next question, and we're coming to the last few questions now. How are you different from the competitors that were mentioned in the RHP? And in terms of growth strategy and expansion, what are going to be the key levers? Is it going to be new products, new geographies, or a deepening wallet share?
We are different than our competitors or peers. Whatever we listed is that we have a very diversified product portfolio. We are very early developing the intermediates with a very efficient and cost-effective manner of our product. Apart from that, we are having mainly whatever the product we make is a product which is used by the big generic players in 17 therapeutic areas, whereas our peers are mostly having very limited segments of that therapeutic areas. So these are the key difference between us and them. Apart from that, AMI Organics is in an upcoming years, new molecules what we have developed is giving us a good revenue in terms of new molecule entering into the market. In every year, there are 4 to 5 molecules which are coming in our basket with the expiry, and these all molecules is very well utilized by all the generic player worldwide for the DMF filing. So we are always in the preliminary supplier to them, and that is giving an advantage of 70 to 80% of that demand is coming to AMI Organics. So this is the difference between us and the other competitors.
Thank you, sir. Next question. What is the average tenure of your contracts with the top 10 customers? Is the next question.
It is in between 2 to 5 years. Depends on the product and depends on the customers.
Sure. And the follow-up to that question is, say a competitor were to come up with the same sort of technology as AMI, what stops your customers from going to them, and how have you been able to maintain the customer stickiness?
See, currently also all the products which we are leading, there are n number of manufacturers are there in the world, but they are not even able to get that business because pharma industry is a very entry barrier industry where who is the first developer with all the documentation and all will get the bigger pie of the cake, because once you finalize your DMF with vendor qualification system, and it will be very difficult for any drug manufacturer to change the vendor because it is a very cost occurring, as well as impurity profile, all the process compliances, specifications, MOAs has to be unique for all the suppliers, and that will be very difficult for them, for the new entry to come and match the same thing, because we have 10 years of experience. We develop molecule when it is launched, when the competitors coming, when it is generic. So there is a 10 years of span between that. That gives AMI Organics to do a lot of work on their product, not only in terms of quality, but in terms of cost management, in terms of supply chain sustainability, everything. So this is how any competitor who try to come enter in the business will not be easily enter.
Thank you, sir. The last question for today. Even within your stated focus on specialty chemicals, are there any particular niches or segments that you're looking at for future growth?
See, basically, we want to continue focus on our chemistry and our chemistry's applicability in any segments. See, the application of our product is different, but the main core strength of organics is the chemistry which we are handling. And this chemistry output of the molecule that go either in the pharmaceutical or it may go into the cosmetic, personal care, agrochemicals, or in electron donor kind of petroleum industries. It may also go in electronic semiconductor kind of industries as well. But this is all application of the molecule.
Sure, sir. Thank you. That brings us to the end of the Q&A session. I now invite Mr. Ankur Agarwal from Axis Capital to give the vote of thanks.
Thank you. A very good evening to each and everyone. And thank you very much for taking your time and participating in this IPO meet. During the course of this webinar, we discovered a lot about the differentiated business model of AMI Organics and the superior financial metrics. But one thing which clearly stands about this company is the hands-on nature and the passion of the promoters and the flawless execution by the management team. This IPO opens on 1st of September and closes on 3rd of September. And we really look forward to having great support from you all in making this IPO a grand success. We urge you all to participate in this IPO, and this is a very attractive opportunity. And we want you to support this IPO and make this a grand success. Thank you and stay safe.
Thank you, sir. And thank you, everyone, for participating in the virtual brokers and analysts meet of AMI Organics Limited for their forthcoming IPO. Unfortunately, we could not take up all the questions due to paucity of time, but please do feel free to reach out to us or email us in your queries at ipoami@amiorganics.com or ipo@adfactorspr.com. We will do our best to reply to your queries within 48 hours. Take care and stay safe. Thank you.
Thank you.
Thank you.
Thank you.